And Stears projects an average annual inflation rate between 27.59% to 31.85% for the year 2024, amongst other projections in its recently released 2024 Economic Outlook report. And joining me now to discuss, the content of that report and the projections for the year 2024 is Dumebi Oluwole, who is an economic analyst with Stears. Thank you for joining us on Business Daily today.
Thank you for having me. Good morning.
Good morning. Okay, let's begin with, like I said, the macroeconomic outlook. I did point out that that report has stated that Nigeria's inflation rate between the annual inflation rate will be between 27.59% and 31.85% for 2024. Can you throw more light on that? And I did see that it also added that this is considering the current economic climate and the depreciating naira. But let's hear from you. What is your basis for that finding or that projection?
Okay, so I would start with the key macroeconomic indicators that we're looking at through the outlook. And we looked at GDP, inflation, and the exchange rate. The current economic climate for Nigeria is pretty much tough. And we've seen business output considerably decline over the past year, especially with the reforms Nigeria has undertaken. That's the petrol subsidy removal and the FX liberalization. And all of this put together has significantly dented output levels and also increased commodity prices as well as producer prices across the country. So this is what is currently feeding our inflation outlook. Stears has a Pan-African inflation model. It's a data solution where we forecast inflation for Nigeria using a robust set of macroeconomic variables. And that's how we've gotten that projection that you rightly said. We have three scenarios: the bull scenario, the bear scenario, and the base case scenario. And typically, since the last quarter of 2023, we've seen Nigeria's inflation rate settle at the upper band of our forecast, and we expect that trend to continue in 2024. So meaning that in 2024, we might see Nigeria's inflation hit 30% or even surpass 30%, and that will be the highest inflation rate in Nigeria's democratic history. The key things feeding our inflation forecast are, number one, the continuous decline in consumer disposable income, weak demand often, and by economic theory, consistently increases prices. Then we also have limited supply. There are structural bottlenecks impeding Nigeria's agricultural productivity, and that considerably declines supply of food items, which contributes over 50% to Nigeria's headline inflation. So that's another thing we're looking at. And a few things that we already know that Nigeria still continues to struggle with in terms of agricultural productivity is insecurity, poor infrastructure, poor storage facilities. All of these problems will linger in 2024. Feeding into inflation. The final and most important thing is exchange rate depreciation. Right now, exchange rate depreciation is one of the largest contributors to inflation in Nigeria today. The parallel market rate has significantly depreciated to around 1,400 naira to a dollar, and the official rate has consistently remained over 900 naira to a dollar to about 1,200. This is per FMDQ and also per the CBN. So meaning that exchange rate pressures are still very prominent and will continually feed into Nigeria's inflation through imported expenses. So that's our macroeconomic outlook in terms of inflation for Nigeria. But in terms of growth, we still see the services sector contributing significantly to Nigeria's GDP. We've seen that happen over the last 5 years, and we expect that trend to continue.
Okay, still on inflation, I quote, that the report stated that there is the need for immediate action on dollar liquidity, which it stated is crucial for effective inflation management. In specific terms, what actions do you expect to see, at least from the monetary side of government, to, douse the inflationary pressures we're currently facing?
I mean, I would say the first thing is getting that lump sum dollar. We already know that for the CBN or even the federal government to attract the much needed dollar inflows, we need to make our domestic business environment enabling enough for businesses to come in. That attractiveness is extremely important to boost investor confidence that will now bring in or allow those dollar inflows that we need to come in. But already we're seeing both fiscal and monetary policy authorities take, I would say, bold steps. The federal government is already speaking to the World Bank to get some additional funding. We've also seen the central bank get about $2 billion from Afrexim, and so we most likely will continue to see this trend linger in 2024, just so that those dollar inflows come in substantially to meet the CBN's capacity to defend the naira. But in the absence of that, most likely we'll continually see the CBN's intervention efforts constrained, and this would continually feed the fuel exchange rate depreciation. But then again, a significant policy signal that we have seen is the CBN is clearly moving towards the path of orthodoxy, and we'd likely see this dollar liquidity take center stage in its liquidity management and price stability efforts. So it's just being on the lookout to see what more the CBN will do, aside what I've already mentioned, and also clearing its FX backlog. We've seen some significant strides there, but the uncertainty or unclarity around how much this FX backlog is and how much the CBN has cleared is still a loophole, or it's still I would say, a dark spot that needs some light to be shed there, so that we truly understand how significant the CBN's efforts are in clearing that FX backlog. That will significantly increase investor sentiment and reduce speculative attacks. The CBN's MPC meeting is scheduled for February, later on in the month, and we would likely hear some I would say, policy directives on how the CBN plans to approach this dollar illiquidity and also price stability measures in the country.
Indeed, just like you stated, we will be on the lookout to see just the decisions that will be made at the Monetary Policy Committee meeting that is expected next month. But let's move now to Nigeria's energy market, which specifically Nigeria's renewable energy market. And from the report, I noted that Stears is saying that that market still holds a modest appeal, but is still a risky bet. Can you speak to that?
Yes, definitely. So because of the issues with Nigeria's upstream gas and oil sector, we still see all of this negative sentiment pervading the investor climate or the investor landscape for Nigeria's energy sector. And this negative sentiment still trickle down to the renewable energy sector. So the key issue here, or the key theme is here, until we're able to significantly address the issues facing Nigeria's upstream oil and gas sector, it will take a while before we see significant strides in the renewable energy sector. The issues concerning vandalism and theft, all of these issues are significantly pushing IOCs out of Nigeria's oil and gas sector. And if these issues are not curbed significantly, we would likely see these divestments continue, or a shrinkage in investment into Nigeria's oil and gas sector. And this will be happening despite the petrol subsidy removal that is supposed to be a leeway to cost-reflective energy pricing, and is supposed to have attracted investors into the oil and gas sector. But a key thing to still note here is that there are still some level of bright spots, I will say, for Nigeria, for the transitional fuel, which is gas. But again, with the issues facing the upstream sector, that bright spot is dimming, but we expect to just see some level of interest increasing from investors in the EU and even general global demand for the transitional fuel gas. But in terms of renewable sector investment, it's still, like we said in the report, is still quite a risky bet, and would see modest events and modest happenings there.
Okay, now to the power sector projections. I mean, I hate to play devil's advocate, but Stears is also saying that reliable power supply from Nigeria's grid is still a long-term ambition. What are your thoughts on that?
Sorry for it looking damped. I could tell from your voice you're not so excited about that outlook. But regardless, it's just based off of the facts of what is happening right now in Nigeria's electricity space. We do know that our transmission capacity or Nigeria's electricity capacity should be able to meet local demand, but unfortunately our transmission capacity is significantly low due to dilapidated transmission infrastructure, and all of this will continually dampen prospects for Nigeria's ability to supply sufficient electricity across the country. I think in 2023, at the beginning of the year, and even in 2022, we did see substantial we did see quite a number of grid collapses, and even though the prospects for that happening in 2023, in 2024 still linger, chances are that, and that of course still feeds into the pessimism for electricity supply and electricity transmission in Nigeria. So that's pretty much what is feeding our electricity and power sector outlook for 2024.
Okay, we don't have so much time, so let's just move on quickly to the banking sector outlook. And I did observe that Stears is optimistic that banks will play a key role in supporting telcos. I mean, over the past year, we've seen a number of rifts between, banks and these telcos. There's been one between banks and MTNs on USSD charges and all of those. But you seem to believe that this year will be better than the last. But let's speak on that quickly.
I mean, we've seen some regulatory strides to solve the disputes between the banks and the telcos. We've also seen telcos coming to the table, banks coming to the table to try to solve this issue. And we're quite optimistic because we expect this trend to dissipate. There are a lot more things that banks and telcos are facing or striving to achieve in 2024 in terms of like digital innovations, boosting digital infrastructure, just taking advantage of the interest rate environment. And we just expect a quick solve to the telco and banking services dispute or whatever it may be in terms of the services that they will be providing. We've also seen a level of, I would say, fragmentation in how telcos and banks are approaching the particular issue, and we just expect that positive trend to continue in 2024. But speaking specifically to the banking sector outlook, we did see some level of increase in some level of increase in banking sector activities in 2023, and one of the key indicators to that is how the banking sector supported the NGX in 2023. We're still expecting to see that positive trend in 2024 stemming from higher interest rate environment.
Okay, you did state that the services sector is expected to, power Nigeria's growth. We've seen that happen in the past year. We saw the service sector contribute largely to Nigeria's GDP. But let's speak to that. The report is saying that while traditional sectors like oil and gas show a rebound in activity, the subsectors within the services are rapidly shaping the growth narrative. So let's speak about the services sector. What specific areas are we expecting to see this growth come from?
Yeah, I think we already even started talking about that just from your last question. So pretty much the financial services sector, telecommunications, those are the bright spots in the services sector or the services industry that will continue to engineer growth from that particular sector and its contribution to GDP. From the banking sector, like what I was mentioning before, we're likely going to see this increase in its digital infrastructure, digital innovations to significantly boost its output and boost its revenue and profits, and that would feed into the overall industry performance. We're also seeing some level of increase in fintech activities that could likely also support the financial services industry. Key things to watch out for from there is this shared shared digital infrastructure that was seen between banks and fintechs. We're seeing fintechs leverage the infrastructure of banks to provide more services to consumers and even businesses alike. And a key thing that is driving this was seeing an increase in the use of e-payment channels by consumers, and this trend is boosting the demand for financial services throughout the country, and we expect that trend to also continue. We've also seen the CBN take off the 2 billion SDF cap on for banks to be able to drop excess deposits or excess cash that they have with the CBN and get some interest. So because we're seeing a likely increase in interest rates in Nigeria, banks would definitely be able to take advantage of that high interest rate environment, and that would support their revenue and support their profits in 2024. Also, again, feeding into the overall outlook for the services industry. I think another thing to also cater for here is how there will be some level of competitiveness in the financial services sector, just trying to provide favorable yields to both investors, consumers alike, just making sure that securities, that's a fixed income securities, have favorable interest rates or favorable yields to garner more investors into that market. Banks as well will be competitive with the rates that they do provide, and just likely, so the overall outlook for the services industry is quite positive, just off of the back of, number one, the growth trend we've seen there before, and the positive trends that are likely to emanate from the financial services sector.
Insightful conversation there on the Stears 2024 economic outlook. Thank you, Dumebi Oluwole, economic analyst with Stears. Thank you for joining us on Business Daily.
Thank you for having me.
And this is the point where we draw the curtains on today's edition of the program. Do join us again tomorrow. Of course, we will be here as usual to bring you update and, of course, break down these trends on the Nigerian economic outlook and, global economic outlook for the year 2024. So join the conversation on social media and let us hear your thoughts. My name is Chiamaka Enendu. Thank you for watching, and bye for now.